First off, this is a Form 8K, which companies file to announce significant events to their investors. It's like a corporate bat signal. The core of this filing revolves around what happens when a company's stock price dips too low for too long. Nasdaq, the stock exchange, has rules about this. If a stock trades below $1 for an extended period, the company risks being delisted, meaning that the company's stock will no longer be traded on the Nasdaq. No one wants that. Energous got a letter saying, "Hey, your stock price is too low." They were initially given until February of 2025 to fix it. Now they've been granted an extension until August. Think of it as a homework extension, but instead of your grades, it's your company's worth on the line. The problem started in August when Energous was first warned that their stock had been below the $1 mark for 30 days straight. This triggered the initial warning from Nasdaq. They got the standard 180 days, which would have ended in February, to get back on track. To get this extension, Energous had to show that they meet all other Nasdaq requirements except for the stock price. They also had to say they intend to fix the price issue during this extension period, even if it means doing a reverse stock split. A reverse stock split is like taking a pizza and cutting it into fewer but larger slices. If a company does this, they reduce the number of outstanding shares of stock, which can increase the price of each remaining share. It doesn't change the overall value of the company, but it can make the stock price look better. Here's the catch: to avoid being delisted, Energous needs its stock price to close at or above $1 for at least 10 business days in a row before the August deadline. The company is considering a reverse stock split. They might ask their stockholders, the people that own their stock, for approval. If approved, the board will then decide if it's actually necessary to do it and whether it will help them meet the Nasdaq requirements by August of 2025. Now for the disclaimer. There's no guarantee that Energous will be able to get their stock price up. They also need to keep meeting all other listing requirements from Nasdaq to stay listed on the Nasdaq capital market.